Welcome to the Westcliff University podcast, where we explore revolutionary ideas that force us to rethink life, creativity, humanity, and the future. Today, I've got the privilege of interviewing Natalie Pace. Natalie is a best-selling author, financial educator, and sustainability investment pioneer who's been called the queen of thriving in the new economy. But she isn't going to talk about stock picks. She also won't be presenting a slideshow of safe advice. She'll be talking to us about the basics of how to survive financially. But before we dive into this with Natalie, if you'd like to learn about Westcliff University, including our incredible undergraduate athletic program, visit westcliff.edu. You can also connect with us on Facebook, Instagram, LinkedIn, TikTok, X formerly Twitter, YouTube, and the Little Red Book. This podcast conversation is for general informational purposes only and shouldn't be taken as financial advice. Be sure to talk to a licensed financial professional before making any financial decisions. The views shared by the guest and by me, the host, are our own and don't necessarily reflect the views of Westcliff University. I'm Dr. Barry Sandrew, your host on this journey. So now let's get into it. Join me in welcoming Natalie Pace. Hi, Natalie.
Hello. Nice to see you.
Yeah, thanks for joining us here. Natalie, in addition to being a best-selling author of several influential books, including The Gratitude Game and The ABCs of Money, your work has been featured in Forbes, Bloomberg, and the Huffington Post. You've also been a frequent guest as financial expert on various national television and radio programs like CNBC, Good Morning America, Fox News, ABC TV, Forbes.com, NPR, and others. Well, today, we've got an audience that runs the full spectrum from expert to novice when it comes to managing money. My hope is that everyone will gain some valuable insight from our conversation today.
Well, because I work on the financial education side, I do think so. And also, we integrate sustainability. And I think that that is a money thing anyways, both that you can save thousands, but you can also put your money where your heart is. And there are reasons why that can be actually very profitable as well. Of course, you have to do it with a foundation of financial literacy, but I firmly believe they go hand in hand. So even the experts might get some tips here.
Well, I'm sure they will. But let me start with a very basic question that is on everyone's mind. Well, first of all, I'm dealing with people who are real startup people. They're basically in their garage, if they're lucky to have a garage. If you were talking to someone who thinks they'll never have enough money to start a business or invest, what would you say to inspire them?
Well, I would say, look at me, right? I am a copper miner's daughter. I graduated from USC, summa cum laude. That was my part of it, but it was all on grants and scholarships. And also, as a struggling single mother, I realized that I needed to earn money while I sleep, that it wasn't going to be possible for me to actually become financially free by getting more jobs. And, I can share some of the secrets, some of the ways that I did that. But within 2 years, I had launched my business. I was on Good Morning America. Within 5 years, I was ranked the #1 stock picker. So, it's not like you're guaranteed a great deal of success very quickly. A lot of overnight successes take decades to build. But I would just say that there's so much opportunity. And what we need to do is to understand how to free ourselves from the burdens that prevent us from accessing those opportunities.
Yeah, but the type of people I'm talking about, they come to me, they've got an incredible idea for a business or some sort of innovation, but they're starting from zero. They have no assets, no financial safety net. They probably have student loans. What's the very first decision they need to get right to make it?
I think the first decision you need to get right is to understand that you can have a job that pays the bills, first of all, and still launch your passion project. Secondly, if you can find ways to lighten your load, to as an example, when I was going to launch my business, what I did is I realized that my bills were drowning me. So I teamed up with another single mom and we got a better house and I cut my expenses by more than a third. And my son was in the school he needed to be in. He could walk to school. So that gave me more time, more money to start launching my business. I was not at all born with a silver spoon. And I certainly wasn't swimming in cash. I was swimming in bills. So I would just say that again, it's the fundamentals, right? It's try to find ways, not by cutting out cafe lattes and avocado toast, or being most of us are not shopaholics and we're not mainstreaming these things. If you are, okay, cut those out too. But what really is drowning us, as you mentioned, student loan debt, the high cost of housing, all of these things. So we can't really count on other people solving those for us quickly. Clearly, we can't because it's a crisis at this point. It wasn't easy when I was doing it, launching my business then either. It's even harder now. But that's what I would say is that understand that you do have to make brave choices. You might have to make sacrifices, right? But if you want to get to a better tomorrow, then that's what you're going to have to do is come up with a plan that allows you to stop making everybody else rich and start building the foundation for a rich life for yourself.
Very good. But there are resources. There are free resources like the SBDC, the Small Business Development Council, where you can get absolutely free advice with just an idea, correct?
Well, yeah, and also, look, you are at Westcliff University, right? Your professors might become a great sounding board for you, and even better, they might become a member of your board. Again, you're not going to have maybe an official board with fiduciary responsibilities, but why not have a board of advisors that you can run ideas off of? And honestly, as you get those 10,000 hours in and you become expert in something, people really start leaning in on your great idea.
Yeah, that's true. And we have something called the Smart Capstone Program, where we actually have our master's graduate students have to complete this in order to graduate. We get startup companies coming to us with projects. It could be anything from oh, an executive summary to a full new marketing plan. And we assign 3 to 5 MBA students and 1 to 2 faculty members as mentors. And they basically take on a project pro bono for 8 weeks. So there are plenty of resources if you know where to look for them.
Yeah, and also I would just say as you start gaining momentum, as you become an expert in something, other people will notice it. One thing that I think is undervalued a little bit is I always donate to charity. Now, a lot of people might say, okay, I can't donate to charity because I don't even have enough money to pay my bills. Well, time and talent can be very valuable too. And how I launched my first business, well, I mean, I've had various businesses, but the more recent one, the Women's Investment Network, that was a bunch of women that I was doing, raising money for a local public school to put in their computer labs and have music instruments there. So these women, it was daring, they were watching all their money disappear in the dot-com recession, and I had tripled my money. And so they kind of cornered me and said, hey, you got to teach us what you know because our brokers and our husbands lost all our money. So again, as you get noticed, if you start really developing an idea that other people need or want, you're going to get noticed for that. And people are going to want you to share that with them.
Very good. Well, let's talk about risk for a second. Most investing advice is about risk mitigation, but startups are built on risk. How do you advise people to navigate that contradiction?
Well, the first thing I would say is that you want to separate your passion project from your money while you sleep. So I would say, the foundation of wealth and wealthy people is passive income. And that is something that you want to understand what's age appropriate, properly diversified. We do lean into risk in my sample pie charts as well, because that's where the performance is. Most people have heard of the Magnificent Seven. That's the trillion-dollar technology companies plus Tesla on Wall Street, and they've really been responsible for the gains for the past 2 years. So I would say that even in your wealth plan, which should have an element of risk mitigation to it, you still want to have some slices for hot. In your passion project, that's something that you do want to still have some risk mitigation there. In other words, a lot of people are saying, oh, I'll launch it on my credit card. But any smart, astute person would never borrow money at usury rates at 20% interest in order to launch their business. So, that's what I would say is start it as that 5 to 9 thing, that thing after work that you are developing. And then once it's ready to get to that point of bringing in the capital, it should be other people's money. Don't sell the farm or leverage your mortgage or borrow on credit cards. If it's truly a viable business, if you've truly developed it to the point where it's super exciting, then you're going to find some partners for that.
And you think it's acceptable to get family and friends to invest?
I think that that's the way businesses are launched traditionally, right? Like getting to Series A or even Angel, there's a step before that, and there are some exciting new developments for that help the friends and family, and also help the entrepreneur. And my son is just now launching a business, and he was the one that kind of showed me some of these new ways of handling that. But yes, I would say yeah. And you might have to do it that way, or you might have to keep it as a passion project for a while. Well, I mean, the Women's Investment Network was a passion project for a very long time. And it just naturally grew to the point where I had to do that full time.
You still do that, correct?
That business, no. We actually let that one go, and now I do it just as a sole proprietor, and then I also have the Earth Gratitude Project where I'm the co-creator of that.
Okay. I know that you've dealt with a lot of very wealthy people, and you've seen people lose everything, and you've seen people become millionaires.
Yeah.
What separates the two beyond luck?
It's really financial literacy. And I would say that I just, in fact, had a fireside yesterday about I called it the 10 wealth secrets of the 1%. So there are so many ways that wealthy people think about money differently, from the accounts that they invest in, from how they will their estates to their kids, and how they start that process maybe when the kids are teens, so that there's, especially if you have super wealthy, right? So statistically, the get rich quick people lose their money pretty fast. And a lot of it has to do with that, is that, you haven't learned how to protect it. You got to stop making the tax man rich. That's a big, important part of it. I always say stop making everybody else rich at your own expense. And that's a piece of whether you're just starting out and trying to get wealthy, or if you're super wealthy, you better know how to put those plans in place as well. Otherwise, you can lose it quite easily.
Yeah, the most
I mean,
important
the tax man is one of the easiest ways.
the most important thing is trying to get to the point where you're making money while you sleep, correct?
Yeah, and I would say everybody can do that. And in fact, we've talked about this a little bit in our preamble to this interview. In the ABCs of Money for College, I'm actually encouraging parents to read it when their kids are born. But as a person who had to go to college on my own resources, with scholarships, grants, and keeping costs down and all of that, I rode a bike instead of driving a car. I lived with family members instead of living in the dorms. So there are ways that you can reduce the amount that you're going to end up with on the back end in student loan debt. All of this is part of it. It's not just it, and investing is a key of it too. And the reason that I mentioned this in the college book as well, in your college savings plan, you can invest that. And, I started that with my son, and I would actually have him pick investments that he was interested in investing in. So, you can start this process, and teens love it. They love learning about investing. I do a lot of games, stock picking games, and other things with teens. And it's pretty empowering to say, "Wow, I really like this company, so I'd like to invest in it." But then also knowing how to evaluate it. And A, is it a good thing to invest in, or is it maybe a flash in the pan? And B, am I buying it for a good price? Because I think everybody understands that you do want to buy it for a good price and then sell it higher.
Let's say someone builds a profitable startup that pollutes the environment or exploits labor. Is that
Yeah.
still a success in your book?
Well, full disclosure, as the person who wrote Put Your Money Where Your Heart Is, obviously I'm not going to ever think that. And I may have a bias towards sustainable and socially forward. But I will say this is that, you're seeing that electric vehicles are fast growing, right? And you're seeing that internal combustion engine vehicles, they're carrying heavy debt loads, and they are not, they're contracting in their sales. This was the first time that ICE vehicles were under 80% market share in the US, and EVs are just on fire in China. So what we're seeing is that, everybody is kind of aware of environmental impact and also of social impact. So you could maybe have something that could exploit either one of those for a short period of time. But I would say the regulation fees, the amount of trouble you get into, the citizens' impact, consumers boycotting. We're seeing that with even Tesla these days. So I would say it's a better idea to be present. I mean, whenever you're developing a product, you want to be forward thinking, like, well, people need it today, but will they also need it tomorrow, right? But part of that conversation today is absolutely fair trade and the environmental impact. And ignoring that, I think, is a fool's game.
But isn't it true that EVs wouldn't really be as successful if it wasn't for the subsidies?
Um, I think that subsidies have made it more affordable, but I mean, it's hard to know, honestly. I'm a person who gave up my car because I believe in really low CO2 footprint, and I believe in bikes. And like my main choice is bike, walk, or take mass transit. So I'm not one to ask about, automotive vehicle choices, because my choice was let's get rid of it
Yeah.
because I want to be the example on CO2s. But I would say that and there's there are conversations about this, like people will say, oh, well, then you have that environmental impact of the batteries and the lithium mining and all of this as well. And my response is always, single occupancy vehicles are not the most efficient way to get people around. We've seen that a lot. It's bad for the air quality. Cities that were really brave like Amsterdam got rid of them, in the 70s. So, I mean, not rid of them 100%, but they use regulations to do that. But as a result, they don't have 42% of their population obese like we do.
So the utopia you would see is basically mass transit that would affect everyone. Basically, um,
No, I will never try. I'm not at all interested in solving everybody's problems and creating utopia. What I am interested in is being the change that I believe our planet needs to heal personally, setting an example for others, and inviting them to make brave choices. What I will say is this. I just told you that this was well before we knew all of the environmental impact of single occupancy vehicles. I gave up my car when I wanted to go back to school, because I knew that it was going to save me a lot of money and I could justify it. And I could get people in my family on board with helping me to do that. And what a lot of people don't realize is that you could actually save about $8,500 every year if you were able to give up one of your single occupancy vehicles. Now, if you're living out in the boondocks, that's not going to be easy, but can you find a way to start walking more, riding a bike more? You still might have to drive and pick up your groceries and that sort of thing. So, I mean, it is something I talk about, but Trust me, I'm not at all thinking, oh, I know the utopia and everybody has to give up their car and you all have to give up this. My goal in my financial literacy training and my sustainability training is to say every cent you own and every moment you spend is always an investment. And the more that you can stop making other people rich at your own expense, the more money you have to invest and live a richer life. And that is going to require brave choices. So I'm encouraging people to do a personal thing rather than this is going to solve all the problems in the world. No, let's just do it for us personally, because if we can get ourselves into a position where we feel like we are creating the life we want, then maybe we can create the life we want for our family. And then we might get to the point where we can help our community, right? So I don't think that we go top down. I think we start with ourselves.
No, that makes sense. Of course, the problem is that um, American culture really doesn't lend itself to that kind of thinking because, we built our cities with the suburbs in mind for the most part. So it's very difficult to get around.
Well, I am in Santa Monica. LA is known as a car culture. I don't have a car and I haven't had it for a large number of years. And I'm seeing more and more people make those choices. Now, when I first started riding my bike, again, I was in Santa Monica and there were not even good bike lanes. So now we have great bike lanes, we have shared roads, we have lots of options. We actually even have a metro system that we didn't have. And, we have bike share, which I think the last time I checked was like, it was costing me under $15 a month for my bike share.
Hmm.
And if I rode the bike less than 30 minutes, no extra cost to it. So again, we're here talking about investing and getting money for your startup and getting rich. And I'm telling you, a big piece of it today, it's like an investment banker friend of mine says, look, a lot of businesses are about attaching leeches to your body so that money is constantly flowing out to them. If you think about it, you probably now are paying a monthly subscription fee to even some of your software, right? So everybody is interested in attaching leeches to you. And the more that you can flick those off, the more money you're going to keep. And then you can start doing things that make you live a rich life. I think that living a rich life includes, what do I have to do with my time? And the fact that I just spent a month in England and a week in a manor house, brought 9 other people with me, that is owned by Prince William. And we're all able to live without a car for a full week and a pretty sustainable lifestyle in the best air quality that I've ever seen. I think that's a rich life. So that's my goal, is that whatever your idea of a rich life is, let's stop making everybody else rich. Let's start learning how to make money while we sleep. We can lean into our passion projects and make them relevant. And as Buddha says, when you do what you love, you never work a day in your life. This is a real smile. It's not a fake one.
Let's talk about sustainable investing. You're a champion of ESG and impact investing, but we're seeing a backlash. Do you think sustainability investing has become more marketing than meaning?
Yeah. Well, I am definitely not an advocate of ESG investing. So let's clear that up. And the reason for that is nothing to, I am sustainable minded. And I do believe that people should put their money where their heart is. And I believe that the future is more like investing in companies that are more concerned with sustainability. The problem, as you pointed out with ESG, is that it's not just marketing, it's a freaking lie. So ESG is missing the E. It has all kinds of oil companies and chemical companies and polluters in it. And I had a hard time finding any environmental companies in it. So it's missing the E, absolutely. Might have good social and good governments, but it's definitely missing the E. So I think it's a big lie.
So your suggestion would be, like myself, I invest. Most of my money is in Morgan Stanley and B of A, and there are ESG companies that they want to invest my money in. I basically tell them no. Is that what you would suggest?
Our program suggests having an age appropriate, properly diversified plan where we avoid the older companies and lean into newer companies. There are ways you can do that easily. And that, in and of itself, is helping us to be more sustainable because the older the company is, the more likely it is to be a big polluter. And the newer the company is, the less likely it is to be a part of the past problems. That just makes sense. So the thing is always be age appropriate, properly diversified, and rebalance once, twice, or three times a year. We add in avoiding the companies that are really laden in debt, and those tend to be the older companies, which also tend to be more polluters.
Well, let's talk about these newer companies. What do you think the financial world gets wrong about Gen Z and how they view wealth and purpose? Because they're the ones who are starting these companies.
Yeah, and especially when you think about like AI and some of the future that's happening with that, right? So, we did talk a little bit about the Magnificent Seven. So these are the trillion-dollar companies that were started, 20, some of them 20, 30 years ago, but they were of the Gen Z of their generation. And I think that what's really exciting about Gen Z is that they're into sustainability. They understand the value of their worth. They're well educated and they're super interested in money while you sleep. Now, they do need to get the foundations a little better because a lot of them don't understand, for instance, that a lot of the clothing they're wearing is made of oil, right? So they might be saying, "Oh, I think I'll shop in thrift stores," and they're not realizing, hey, if it's made of oil, it's leaching microplastics every time they wash it. So they do need a little bit of education. We saw especially in financial literacy, with the meme stock furor, that was a rude awakening for people that you couldn't just invest in Bed Bath and Beyond, or there were people investing in BlackBerry was a meme stock, and these are companies that were really struggling, and there were fundamental reasons why they were struggling. AMC was a meme stock, GameStop. And so, people are now learning that you need to be able to evaluate companies. You need to have a time proven plan. And just so I'm not tooting my own horn, but I think it's important to grade your guru. I have been ranked the number one stock picker. The strategies that I teach with the stock report card for evaluating individual stocks are time proven. And even more importantly, the nest egg strategies, of having an age appropriate, properly diversified plan that you rebalance at least once a year, that earned gains in the last two recessions when most people lost more than half of their wealth. 21st century, it's really important to understand that you must do your rebalancing and you must make sure you're properly diversified. And for people our age and older, you actually have to know what's safe in a debt world because most of them are experiencing paper losses as well.
Well, picking up on that, if you had $500,000 to deploy today, no strings attached, where would you put it?
So I definitely, I just told you about our pie chart system. So age appropriate, properly diversified liquid assets. I would also be very interested in multi-generational housing, especially if it could include a component of community gardens in it. So I would be very interested in that. Having said that, I would say if I didn't already have those, then I would be very cautious and careful. I would be dollar cost averaging into the stocks. I would be looking into the shadow inventory and other opportunities in the real estate because all the assets right now are at elevated prices. So, that age old adage of you don't want to buy high and sell higher. You want to try to buy low and sell high. So I would be cognizant of that. It's important too.
Well, let me ask you something personal. What's a mistake you made early on with money that you had to unlearn the hard way?
Mm. And this is a key one for a lot of entrepreneurs, right? This one was actually interesting, and it was a mixed blessing. And it was when I first came to Los Angeles, I was a singer songwriter, and I got a record deal really fast. But the record deal, I didn't read the fine print on the contract, and the amount that I was getting paid was lower than what it would cost to live. So I ended up being homeless, and I ended up having all of my the songs that I had co-written, all of my
Oh,
musical
you
parts,
lost it.
they were work for hire in the contract and I
Wow.
lost them. So you can guess that that was the only time I never read a contract that I before I signed it. So I learned that lesson the hard way, but also I learned the value of things that some and it is hard to say, right? Because I'm a year and a half of just focusing on getting your music better and writing songs better. I'm certainly a better songwriter as a result of it, but you shouldn't do that mistake more than once.
No, for sure. What, what scares you more? People with money and no purpose, or people with purpose and no financial plan?
Well, they're both my clients, so I love them both. But I would say this is that, my dreams inspire my direction, but my footsteps take me there. So the people that have a good, strong sense of purpose, they've got the dreaming part right. But a dream is just a dream if you don't actually take action on it. And an action can't just be like willy nilly because you could get eaten up in a system that can spit you out, right? Like we've seen on Wall Street, we've seen these very dramatic volatility. A lot of people lose more than half of their wealth in recessions. So you do need to understand these basics, right? And then on the other side, I have people that are maybe even very high net worth, right? They've got the money, they know how to make it, they know how to be rich. But if they don't have a good purpose behind it, it's pleasure seeking, right? So it's like, okay, I can buy another car. I'm going to buy a car that has more expensive hubs on it. It's the coolest car you've ever seen. I'm like, well, I'm not really a car lover, so I'm not going to appreciate it that much. So, that's all I would say is that you're rich. You're going to come to a point where it's not just a cool car that's going to get you happy. And if you think that you've got a super powerful purpose in life, the only way you can continue that purpose, whether you're Jane Goodall or whatever, whoever it is if there is an undercurrent of monetary support that's helping you to live your dream.
Very good. What's the one money myth you hear all the time that drives you crazy? And what's the truth people really need to know?
Well, I would say there's more than one, right? So I have 10 money myths in Put Your Money Where Your Heart Is that I strongly recommend people read. A couple of them that are really relevant today. One would be buy and hold. They buy and hold, right? Like, oh, if the markets go down, sit on your hands and just hold it. And the other one would be confusing a bull market with wisdom, or listening to somebody who they think was a day trader and became super rich, and therefore I should do that. There's just so many of them. And they're often it's done by fast money or people that have gotten rich quick, or people who may have an incentive to try to sell you something that they make, it's going to actually line their pockets more than protecting yours.
Very good.
Oh, another one would be even paper losses, right? Don't worry, they're only paper losses. That's a big one today too.
What about crypto?
Mm. Yeah, and we often use it as a hot slice. And two tips I would give on that one is that you can now actually put crypto in tax protected retirement accounts. So a couple of years ago, your only option was in a wallet or on a trading platform like Coinbase. And if you actually were smart enough to sell at the top before the crypto winners kicked in, you would have a big capital gains bill, especially if it was short-term capital gains. That could be up to 37% of the gains, right? So if you put your crypto as a hot slice in one of your tax protected retirement accounts, you're going to be protected from capital gains. But the other thing too is that by using our system and having crypto as a hot slice instead of your entire plan, it's prompting you to do what you should do. So when we're doing our rebalancing, you are looking at your pie chart of what you should have, and you're looking at a pie chart of what you do have. And then if your pie slice of crypto has become 4 or 10, it's begging you to sell high, right? And trim it back. It doesn't mean sell it all. Just trim it back to where it should be. That's called capturing gains. And that's a good thing in today's world. And that gets you through the crypto winter, because then when the price goes way down and your slice becomes a sliver, it's begging you to buy low. So I would just say our pie chart system is really good for crypto lovers.
Got it. I was a kid, nobody taught me anything about money. In fact, the idea of balancing my checkbook never even occurred to me. Um, but I think as a good lesson for those parents out there, if you gave your teenager, I'm talking about a young teenager, 13 years old or something, $100,
Yeah.
what would you advise that kid to do with that money?
Well, and again, if you make it fun, right? If you say, "Oh, you should put that into a retirement account or a college fund," then they're going to be like, "I don't want to do that. I want to go out and buy a new game, Game Boy or whatever," right? But if you say, "Hey, what if we invest that in your favorite thing?" That then they start leaning in, and then we can hopefully make money on that. Get Look at how much money I made. And that becomes a different conversation. So I would say that, look, a Thrive budget, you'd be putting, 50% to survive and 50% to thrive, right? So you would be putting 10% into your tax protected retirement account, earning money while you sleep. A teen isn't going to have the basic needs part of it. So they could put 50, 60, 70%. And again, don't present it like this will be in your college plan and then you get to go to college. Instead, present it more like, hey, why don't we learn how to make money while we sleep? And why don't we pick a company that you like and invest in it and see what we do with it, right? And you can do that when they first start working. You can help them with a dependent IRA because they might say, well, I don't want to do it in a college savings plan because maybe I won't go to college. And then you can say, okay, well, how about in a dependent IRA then? And then also, one other tip I would say is $20 of that $100, just have fun, just blow it, right? Because fun has its own benefits, the happy hormones and all that sort of thing. But I would also say, let's do $10 in charity. And the reason for that is that charity is a weird thing. Like, you're supposed to give without any expectation of return. That is what giving is, right? But what you get back when you donate to charity is always more, especially if you really focus on something that you care about a lot. I could show you many examples, but I will say I started this whole conversation telling you my first business was launched with the women that I was doing that charitable project to raise funds for the computer lab and the music program at my son's public school. And the Earth Gratitude Project was launched, and we have very high profile contributors, including the King of England when he was the Prince of Wales, and Deepak Chopra, and the Queen Diambi. It's endless. Earth Day, all of the big environmental organizations as well. And that started as a charitable thing. I just said, hey, people are interested in investing in green companies, but I have to kick the dirt and make sure it's actually a good green company. And just FYI, Tesla was featured. I got permission by them to put one of their roadsters. So this was even before they were publicly traded. That was actually featured in the first edition of Put Your Money Where Your Heart Is. And I was like, look, this car is a game changer. Every other electric vehicle I'm driving around in is like a golf cart, and this one is a race car. These are huge. So, yeah, that's what I would say is that investing is fun. Gen Z gets it. So if you posit it that way, that you're going to teach them how to make money while they sleep, that's different than saying, let's put it in your college savings account.
Very good. Um, well, speaking of college savings accounts, and this is not a plug, but it's truth. Westcliff is one of the more affordable universities in the country, and also one of the fastest growing ones. Um, but there's a lot of universities that are nothing more than debt builders. What do you suggest to somebody looking to go to college today, and is it worth it?
So not every person is right for college, right? So Prince Harry is a very high profile figure. He did not go to college. He actually went into the military instead. So I would say just know that college isn't going to be the right answer for everybody. But parents, read the ABCs of Money for College when your child is born, because it's all the things, right? Like you do want to set up a college plan for your kid in case they do. Starting out at a junior college where they can figure out what they might be interested in might be a good idea for some of them. So I would say that there's, instead of thinking, okay, I'm going to get a high score on my SAT, and then I'm going to go to whatever university will accept me, and then I'm going to get all the grants and loans that I need in order to do that, you're going to come out with a lot of debt, and you may be even questioning whether or not it was worth it. But if you have a 5-year plan, and part of that plan is I'm going to get a better degree for half the cost of everybody else. And there are many ways that you can do that. I told you a few of mine, right? I didn't have a car. I wasn't paying for car payment, car insurance, gasoline, all that sort of stuff. That's huge savings. I lived with, I didn't live in the dorms. I lived with, family. So these are some of the ways. There are many in there. And I would just say, start the process early and have a 5-year plan, not the college. I have to have the college experience. And even though I only got into my 6th favorite place, I'm going to take on massive debt to do it because that may not be worth it.
Well, let's say we've got somebody who graduated from college and has a job and they've got a little bit of money in the bank, and investing to them is scary. What's the easiest way for a beginner to start investing without losing their shirt?
You do have to know the ABCs of money that we all should have learned in high school and college, right? So I would say we must start with that. You wouldn't say, "Oh, I'm going to try to read this book," if you didn't know how to do the your ABCs. So I think that's where the fear comes in because it's unknown. So make it known, right? Learn. And again, you can't just make it known by saying, okay, I'm going to read the Wall Street Journal every single morning. That's not going to increase your financial literacy. It's going to increase your awareness of the news and headlines. I would say, look, investing is like 100 in an individual company. It's like 100-piece puzzle. And reading a headline is like turning over one puzzle piece. If you learn the basics of investing, our pie chart system, what's age appropriate, how to diversify, it's actually really easy. It's easy to self-direct it, and it's easy to start. Another tip I would say is that start by putting 10% of whatever you make into tax-protected retirement accounts. And don't just have it be at your employer. Like, definitely do it up to the match. That's free money. But you should set up your own individual retirement account because you don't have freedom of choice at the employer. Also, another tip is that a lot of people are young and they're healthy and they're spending an arm and a leg on health insurance. That's another low-hanging fruit to stop making the health insurance company rich with a higher deductible plan and a health savings account, which also can be invested for money while you sleep, but it's also a tax credit. So again, all of these things, and you may say, that sounds like a lot to learn. And it should be something that we were just learning in high school so that it would just be part of our financial foundation. But what I would say is it's cumulative. And once you learn it, then you can just do it. So learn it as soon as you can. And parents, teach your teens.
In doing my research around your career, you've got a fantastic career. You still do. I discovered 21 Days of Abundance and Prosperity, which was very enlightening. And I watched all 21 podcasts. And could you explain what you were doing there and why it was so compelling to me and others?
Well, thank you, because that was quite a time commitment. So I really want to thank you for doing your research on that. Um, a lot of us in the beginning, especially, fear, we associate money with it's all the negatives, right? It's greed, it's fear, and the only way to pull ourselves out of that is to start understanding money at its essence. And so each one of those days, you probably notice had a mantra
Hmm.
associated with
Yep.
it. And these are positive mantras. And I'm saying it's 21 days to a healthier, wealthier, more beautiful you. And basically, what I'm going to try to do is I'm embedding money mantras into your brain so that they replace the fear and the greed with stewardship, with investing, with money while you sleep, with every moment you spend is actually an investment. So, but when we do that, we start seeing opportunities. It's funny because a lot of times when we have a negative outlook, I say it's like falling in a mud puddle, and instead of getting up and showering, you're like flinging mud on yourself, and you're like, look at how much mud I have on me, and you're not able to see anything. There might be a rainbow over your head, there might be birds singing, there might be a pot of gold over there, and you're not seeing any of it. So as you and I you were very good about pointing out, you can know everything about money, but if you fear it, you may not be able to keep it. And it's very likely, and even if you still and I know a lot of wealthy people who have a lot of fear in their lives, and they don't actually enjoy the money as much because they're always afraid that everybody is wanting to take their money from them.
What about, let's talk about right now, with everything so volatile. I mean, what are you doing with your money, for instance? I mean, are you holding it? Have you not invested? Have you um, taken money out of the market?
We are overweight safe. So I would say that it's a time proven thing that jumping in and out of the market doesn't work. Like, people have been afraid, and oftentimes that fear will have you selling low. Like, they'll come to me at the bottom of the market and say, I just can't take these losses anymore. I just got rid of everything. Or they got afraid a few years ago and they sold everything and they missed out on the extraordinary rally. Or they got afraid in the pandemic and they missed out on the extraordinary rally. So what I do always is age appropriate. So I'm a little advanced in age, and that means I'm going to have more safe, earning that little 4% without paper losses, which you can do, but you have to do it with a strategic plan. And then you do stay invested, but the once, twice, or three times a year, rebalancing helps you to capture gains at the high and to keep adding more. So when the price goes down and your slice gets smaller, it's prompting you to add more at a lower price. And that is exactly what works in investing. Buying low and selling high works. Having an age appropriate this is called modern portfolio theory. I'm sure you know about that. Regular rebalancing is key for modern portfolio theory, so that because you get an age older, and also equities tend to go up higher, so you're going to be overweighted in equities if you're not rebalancing. So yeah, I'm still doing my pie chart system, but I'm overweight, a little more safe. I'm acting 20 years older than I am.
Do you have specific recommendations for women clients?
Um, no, I don't think there should be a difference in gender on that. I did launch the Women's Investment Network, and what's really funny about that is that we immediately had so many men investors, especially after I got ranked the #1 stock picker. And they were like, it's really hard for me to log into your site. It's all pink and it's called the Women's Investment Network. So I'm very gender neutral, and I think that women and men, sure, if you want to do something that way, but the truth is, age appropriate, properly diversified, rebalance once, twice, three times a year. You see no gender there.
I know that you do retreats, and you've got a number of other um, um, services in counseling activities that people can take advantage of. And I thought when I heard about this that they would be totally out of reach in terms of a cost and everything, but apparently they're not. Could you tell me some of the stuff that you're doing to that's unique?
Yeah.
Well, first of all, your approach towards financial counseling is significantly different than most people, because you approach it from a mindset perspective, correct?
Well, I believe that you need both, right? I think that you've got to shift the way you think about money, but you also have to be money savvy. So, yeah, I encourage people. Actually, when I first started doing the retreat is just the basics, right? Day 1, nest egg strategies. Day 2, stock picking. Day 3, what's safe and how to get safe. But in the wake of the retreat, I would send them the 21-day coaching program not only to help them implement what they learned at the retreat, but also to get those money mantras going, right? So every day there would actually be a money mantra, but also an action plan that would be associated with something they already learned at the retreat. So there's that. And of course, the books have all of the things that you would learn at the retreat. The difference being that you can read about it in a book, you can learn and implement it at a retreat, or if you're a busy professional, they use my private coaching for a second opinion or something of that nature, and of course that's more costly. So if you don't have that much money, you can't attend an online retreat or get a second opinion, you can read about it. You might qualify for a scholarship. We do have a long list of people who want a need-based scholarship, but we always have 10% of our seats are reserved for need-based scholarships as well. So yeah, it's much more affordable than people think. Yes, definitely. In our early bird pricing period, which will be coming up for the June retreat by the time this is out, it's only $695. So it's really worth it. But that's a very brief window. So you definitely want to get in on it quickly. And a lot of people say, oh, wow, well, that sounds $695. I get it for free from my broker salesman. But most managed plans, do what the market does. The strategies you're going to learn in my retreat actually earned gains in recessions when most people lost more than half, and they've outperformed the bull markets in between. And they also will teach you how to save thousands annually in your budget. So the small cost of the retreat is actually usually paid back within a few months in budget savings alone. So it's really, it's just going to become the foundation, right? And that's what we need the ABCs of money, the life math training that we should have gotten in high school, and it will transform every moment of our lives going forward.
Do you get into commodities as well?
Yeah, definitely. Yeah, because they're a good hedge against a downturn. So I definitely right now have a hedge of silver. Yeah, and copper, we like copper because it's been called I hate to use this term, but that's what it's been called, the new oil, because it's so essential to the clean energy revolution. And actually, so one of our hot slices is Peru. We use it as a mid-cap value replacement. And the Peruvian fund that we have actually has a nice yield to it, usually double of what the US-based equivalent value fund would have.
Great. How do people get in touch with you?
So the easiest way is you can always visit me at nataliepace.com. You can email us at info@nataliepace.com. And when you go to nataliepace.com, you'll see icons for all of my social media. So I do money tips every day. We have online retreats, online training, like I'm having an online stock masterclass. I'm sorry to say that your people just missed it because that was May 3rd and we're talking on May 8th. But I do it every year. And we're also going to be having a real estate masterclass, a rebalancing masterclass, a bond and fixed income masterclass. So, get folded into the training, and within a year, your life is completely transformed. You've got a solid financial foundation.
You're also in Substack, right?
Yes. Yeah.
Very good. Well, we have an email that will be going out to all of the people who are attending this podcast, and in that email, we're going to list your contact information as well as list all of your publication. Your books are still in print, correct?
Yes, and make sure that you get the most recent one, right? Because I do have to update them. The economy does change. So the 6th edition of the ABCs of Money, the 2nd edition of Put Your Money Where Your Heart Is. The ABCs of Money for College is still the 1st edition. Yeah, and the Power of 8 Billion, it's up to us. You can also learn not only about sustainability, but how to save thousands with smarter energy choices.
So you basically do a podcast every day. Yes.
I do money tips every day. I do a free video conference every month, and I do an online retreat quarterly, and I do a visit to our Royal Manor House biennially, so every other year.
Well, I'm sure this is going to generate a lot of traffic onto your sites.
Thank you.
Natalie, I really appreciate you taking the time to spend with our podcast audience. This has been great, and I hope I know people have learned something from it.
Thank you, and thank you for these very, very compelling questions. Really very good interview. Thank you so much.
I appreciate it. Thank you so much. I want to tell you a little bit about purposefulbuying.org. It's entirely managed by our smart capstone students. The platform sells Nepalese products, with all proceeds going to Pahar Trust, a 30-year-old charity that's building schools in many of the most remote villages in Nepal. Check out purposefulbuying.org. And now I want to tell you about our upcoming guest, Kirby Ferguson. We like to think of ourselves as original, as creators, as innovators, geniuses even. But what if I told you that every breakthrough idea, every viral trend, every so-called invention is really just a remix? On May 29th, we'll be welcoming my next podcast guest, Kirby Ferguson, who has been spending a decade dismantling the myth of originality. In his groundbreaking YouTube, Everything is a Remix, he showed us that creativity is not magic. It's copy, transform, and combine. But here's the uncomfortable part. If nothing is truly original, then what does that mean for authorship, intellectual property, and even our identities as creators? Whether you're a founder, an artist, an academic, or just someone trying to make sense of the overwhelming flood of content, this episode will challenge how you see the world and maybe even your place in the remix. In closing, I want to thank our podcast audience and let you know that each of you will be receiving an email that includes a brief survey. Please take a few minutes to fill it out. It helps us improve these podcasts for the future. Also, in that email, we'll have more information on how to get in touch with Natalie, as well as where to find her books and recent publications. Thanks again, Natalie. This was absolutely great. Thank you, audience. Goodbye.